we covered when new PSR is given. So when new PSR is given and we have to calculate sacrifice ratio, we have to use one formula, and that is nothing but sacrifice ratio is equal to old share minus new share, right? We have to use this formula. So first thing we did, that is calculation of sacrifice ratio when new PSR is given, right? Okay, I'm just revising what we did so far, right? What we completed so far. Next, then we studied, so when new PSR is not given. So if new PSR is not given, then what will be the how to calculate? So if new PSR is not given, there is a possibility that share sacrifice is given in terms of proportion or directly it may be given, right? So see, the second thing is new PSR is not given. So if new PSR is not given, then I cannot use that previous formula, that is sacrifice ratio is equal to old share minus new share. I cannot use that formula. When new PSR is not given, but the share sacrificed by the old partner is given, right? What is given? So share sacrificed by the old partner is given. As I told you, if you remember, share sacrificed by the old partner, the numerator of share sacrificed by the old partner is nothing but your sacrifice ratio, right? Right, everyone? So new PSR is not given. Under that we covered first thing, share sacrificed by the old partner is given. Share sacrificed by old partner is given. See here, Hariom and Salman are a partner sharing the profits and losses in the ratio of 5:3. They admitted Jeel for 1/8 share, which he acquires entirely from Hariom, right? So here who is the sacrifice partner? So Hariom is only the sacrificing partner, right? And how much sacrifice done by Hariom? So Hariom, the sacrifice done by Hariom is nothing but 1/8, because Jeel's due profit sharing ratio is 1/8, right? So what will be the sacrifice ratio? So 1/8 is sacrifice done by Hariom. And how much is the sacrifice done by Salman? Salman is 0, right? And how to calculate sacrifice ratio? So we know numerator of share sacrifice is always your sacrifice ratio, right, Sadhna, Dhanashri? So here 1 and here 0. So answer is 1:0. Sacrifice ratio is 1:0. And how to calculate new PSR? So how to calculate new PSR? There's one formula, no? New profit sharing ratio is equal to old share minus share sacrifice. So you can calculate your new profit share ratio, right? We covered this in the previous class. Okay. After that we covered this thing. See, whatever I'm saying, once again I'm repeating, we are here to calculate what? We are here to calculate sacrifice ratio and new profit sharing ratio. First of all, we divided this into two categories. First is when new PSR is given, and secondly when new PSR is not given, right? If new PSR is given, then we have to use only one formula, that is simple formula. Sacrifice ratio is equal to old share minus new share, and you can get sacrifice ratio. But so if new PSR is not given, then what are the different cases? So if new PSR is not given, the first case is share sacrifice is given, right? Share sacrifice is given. See, once again I can write neatly here in the first page regarding calculation of sacrifice ratio and new profit sharing ratio. What we covered so far that I'm discussing. So there are two broader things. First is, I can term it as first, new profit sharing ratio is given, and secondly new profit sharing ratio is not given. right? New PSR is given, not given. So when the case is new PSR is not given, which formula we have to use for calculation of sacrifice ratio? Sacrifice ratio is equal to old share minus new share. So we can get sacrifice ratio. Simple, only one formula. So when new PSR is not given, there are different I can say categories over there. So first A, new PSR is not given, but what given? Sir, share sacrifice is given. Sir, if share sacrifice is given and you are about to calculate sacrifice ratio, so sacrifice ratio is equal to numerator of share sacrifice, right? And so how to calculate new PSR? So new PSR is equal to old share minus share sacrifice. Simple. So these two things we have to apply, right? Sadhna, Dhanushri, Shivarish, I'm just revising what we did so far. Are you getting this?
Yes, sir.
Okay. Now we covered in this category only, new PSR is not given, in that category only. Secondly, we covered B, share sacrifice is not given, but it is given, share sacrifice given in proportion, right? Proportion of, just a minute, share sacrifice is not given, but proportion of share sacrifice on old partner share is given. What I have written? Sir, I have written like this. Share sacrifice is not directly given to you. Share sacrifice is not directly given to you in the question, but proportion of share sacrifice in on old partner share is given. So it means from their old profit sharing ratio, how much they have given, in which proportion they have given. Like Shivarish and Dhanushri gave away 3:2 from their old share. So 3:2 is a proportion is given on their old share. So this information is given, directly share sacrifice is not given. If such is the thing, how to calculate sacrifice ratio? So formula is sacrifice ratio is equal to old share multiply by proportion of share sacrifice, right? So actually you will not get directly sacrifice ratio, you will be getting share sacrifice, right? And the numerator of share sacrifice is nothing but your sacrifice ratio. So I can say here it is a share sacrifice. Share sacrifice is equal to old share multiplied by proportion of share sacrifice. Once you solve this is a step number 1. Step number 2, you can get sacrifice ratio. So sacrifice ratio is equal to numerator of share sacrifice, right? And once you know these, so you can put the formula for calculation of new PSR, right? So new profit sharing ratio is equal to old share minus share sacrifice. Done. We did this also. Now after that we covered another thing, that is C part. I'm calculating, I'm writing here. C thing also we have covered, and that C thing is share sacrifice is not given directly, but proportion of share sacrifice proportion of share sacrifice on new partner profit sharing ratio is given. What given? So proportion on new partner profit sharing ratio is given. In the previous case, proportion on old partner profit sharing ratio was given. Now here new partner profit sharing ratio is given, right? So how to calculate, what are the steps? So first step is, again, we have to calculate share sacrifice. Share sacrifice is equal to new partner profit sharing ratio multiplied by proportion of share sacrifice by the old partners, right? By this you can get share sacrifice. Once you know share sacrifice, so what is sacrifice ratio? So numerator of share sacrifice. Numerator of share sacrifice is sacrifice ratio, right? And thirdly, we have to calculate new profit sharing ratio. And new profit sharing ratio formula is, so new profit sharing ratio formula is old share minus new share, right? Old share minus new share. Done. So we covered this much of things, right? Now we have to move further. Any doubt in this? Dhanushri, Sadhana, Shivarish. Any doubt in first thing? New PSR is given. So when new PSR is given for only one formula. Sacrifice ratio is equal to old share minus new share. When new PSR is not given, so first case, share sacrifice is given. Yes, if share sacrifice is directly given, then sacrifice ratio is nothing but numerator of share sacrifice. And how to calculate new PSR? Sadhana, Shivarish, Dhanushri, old share minus share sacrifice, right? Then if new PSR is not given, second B case. See this B case. So B case is share sacrifice is not given, but proportion of share sacrifice on old partner share is given. Old partner share is given. So if it is given, then we have to use this formula. So share sacrifice is equal to old share multiplied by proportion of share sacrifice, right? For both the old partners we have to apply. For if there are A and B partner, then we have to apply for A and B both, right? Sacrifice ratio is numerator of your share sacrifice. That is numerator of this share sacrifice, right? And what is new PSR? So new PSR is old share minus share sacrifice, right? Then we covered C part. So what is C part? So C part is share sacrifice is not given, directly not given, sir, but proportion of share sacrifice on new partner PSR is given, right? If new partner is new partner's profit sharing ratio is 1/4, and how much sacrifice done by A and B is given in terms of proportion, means how much one-fourth that new partner is getting, C partner is getting. In that 1/4, how much is he get from A and how much he get from B is given, right? That is known as proportion of share sacrifice on new partner profit sharing ratio is given, right? So we have to apply this formula. So share sacrifice is equal to new partner profit sharing ratio multiplied by proportion of share sacrifice. Then sacrifice ratio is equal to numerator of share sacrifice is sacrifice ratio, right? And finally we have to use new PSR formula, old share minus new share. Understood these, Sadhana? Sadhana, you are not audible to me. Shivarish, Dhanushri, I'm getting what I'm saying. Yes, Sadhana? Sadhana, can you refresh once? You are not audible to me. Yes, Shivarish?
Yes, sir. Clear.
Clear? I have revised what we did so far, right? What we did in the previous class. Have you attempted previous, when we ended previous class,
No,
there was one class assessment. Have you attended that?
No, sir. I have not attended the last class.
Why?
Here, full work is going on, sir, in a neighborhood house. So the current has Totally.
Okay. Dhanushri,
Yes, sir.
have you solved previous class assessment? At the end of the previous class, I have assigned one assessment now. Have you done that? I meant to say, see, in the previous class when we ended, I show you now there is a assessment, 5 questions are there, multiple choice questions are there.
I
On
think I've done it, sir.
okay, yes, Sadhna, what about you? In the previous completed, okay,
Yes, sir.
okay. So I'm moving further now. So whatever we covered so far, I have just revised, right? And we are going to discuss next thing, which is left now, right? We covered up to this. Okay, tell me. I'm reading this one question. We're going to solve this one question. I guess we did this, but see whether you are getting it or not. Sita, Geeta are a partner sharing the profits in the ratio of 3:2. They admit Babita as a new partner. Sita surrender 1/5 of his share in favor of Babita. Geeta surrender 2/5 of her share in favor of Babita. Calculate new profit sharing ratio and sacrifice ratio. First of all, tell me which category it is. So new PSR is not given. Yes, sir. New PSR is not given. New PSR is not given. Under that, we covered for A, B, and C. Sir, in A part, share sacrifice is directly given, right? Share sacrifice is given. In B case, proportion of share sacrifice on old partner share is given, right? Proportion on old PSR is given. And thirdly, proportion on new partner PSR is given. So tell me from A, B, and C, which case is applicable? Which case we have to apply here? Sadhna, Dhanushri, and Shivesh, tell me.
Sir, is it B?
B we have to apply? Okay. Sadhna, what do you think? Dhanushri, what do you think? Which case we have to apply?
B, sir.
Absolutely right. So B case we have to apply, right, Sadhna?
Yes,
So
sir.
how much surrendered by Sita and Geeta from her own share is given. So it means proportion on old PSR is given, right? So we have to apply B case. In B case, what we have to do? Tell me in B case what we have to do? What is the first step? So first step we have to calculate share sacrifice. And what is formula for that? Yes, old PSR
Yes, sir.
or old share multiplied by proportion.
Proportion of
Right?
old part.
Yes, yes. So for Sita, what I will be going to do for Sita? So this Sita's old share where 3/5, and I will be applying her proportion. How much she surrendered? 1/5 now. So I will be applying 1/5, right, for Sita. And for Babita same. Babita's 2/5. How much surrendered by Babita? 2/5 no? Sorry, Sita and Geeta, not Babita. Geeta surrendered how much? So Geeta surrendered 2/5 no? Yes, 2/5 multiplied by 2/5. So I will be getting answer. Please help me in solving this.
4/25.
For Sita,
3/25.
3/25, and for Geeta,
4/25.
4/25. And so we know numerator of share sacrifice is my sacrifice ratio. So answer is 3:4, right? So sacrifice ratio is 3:4. Now we have to apply what? We have to apply formula for calculation of new PSR. So what will be the new PSR? New PSR is equal to old share minus
Share sacrifice.
share sacrifice. Absolutely right. So for Sita, Geeta, we have to calculate. Yes, put this into the formula for Sita. Sita's old share where? 3:2, 3/5. 3/5 minus her share sacrifice. So her share sacrifice is 3/25. Absolutely correct. Right, Sadhna? Getting now? minus 3 by 25. You can solve this by LCM. Right now?
12 by 25.
Yes, 12 upon 25. For Sita, for Geeta now, Geeta's share is 2 by 5 minus 4 by 25. We can multiply here.
By 25.
Yes,
6 by 25.
6 by 25. And what is share of the new partner? What is name of new partner? Babita, no? So how to calculate Babita's share? Is it given in the question, Babita's share? No, sir. Babita's share is not given. But we know, na, sacrifice done by Sita and Geeta is nothing but Babita's share. Yes. So Sita sacrifice 325 and Geeta sacrifice is 425. So we can add that. So Babita's share is sacrifice done by, yes, sacrifice done by Sita, that is 3 by 25, plus sacrifice done by Geeta, 4 by 25, right? Is equal to
Yes, sir.
7 by 25. And what will be the final answer of new PSR?
12 is 6
What?
to 7.
12 is to 6 is to 7. So numerator, no?
Yes, sir.
Right? Done? Easy? Dhanushri, Sadhna, Shivarish?
Yes, sir.
Okay, good. Okay. So I'm moving further now. So these also we have covered, but again I am doing this. Please let me know the answer now. Read these and let me know whether it's A part, B part or C part. C case. A case, share sacrifice is given, directly given. So B case, proportion of old PSR is given. And third, proportion of new partner share is given or PSR is given. Read this. Rameshwar and Raja are a partner sharing the profits in the ratio of 2:1. They admit Ranjan to the partnership with 1/4 share of a profit. Ranjan acquired the share from old partners in the ratio of, see, this line is important. Ranjan acquired the share from old share in the ratio of 3:2. So which share? So now if you see this question and previous question, in the previous question, old new partners profit sharing ratio was not given, right? So that's why we applied that proportion to the old partner share, right? But here, sir, if you see, the new partner profit sharing ratio is given, right? So this proportion 3:2 we have to apply on what? Tell me, it's A case, B case or C case, Shivarish, Sadhna, Dhanushri? Yes,
C,
Sadhna?
sir. C case, sir.
C case. Okay, Dhanushri?
Sir. Dhanushri only told, sir.
Okay, you told. I guess Sadhna told. Okay, yes, correct. Dhanushri. Yes, Sadhna, Shivarish?
C, sir.
C case, yes. So start solving. Please help me in solving. What will you do first step? Tell me. What will you do? So we have to calculate share sacrifice. So formula is new partner profit sharing ratio multiplied by proportion of share sacrifice. Proportion of share sacrifice. So I need to do for Rameshwar and Raja. For Rameshwar and for Raja. Okay. So new PSR is how much of new partner? 1/4. So 1/4 multiplied by. So ratio is 3:2, no? It means 3 by 5, 2 by 5. 3 by 5. 1/4 multiplied by 2 by 5. So what will be the answer?
3 by 20, 2 by 20.
3 by 20 and 2 by 20. So we get to know answer for share sacrifice. What is sacrifice ratio now?
3.
Yes, numerator of share sacrifice. So answer number 2, sacrifice ratio is equal to 3:2. Okay, sir, done. Third thing, sir. Now we have to calculate new profit sharing ratio. Formula: old share minus
Share
sacrifice. We have to do for Ramesh and Raja, Ram and Raja. So for Ram and for Raja, what was the old share of Raja? Ram? 2:1, not 2 by, yes, 2 by 3, 1 by 3. Yes, 2 by 3 and 1 by 3. Minus share sacrifice. So share sacrifice is how much? 3 by 5, 2 by 5? Or 3 by 20 and 2 by 20? Yes, this is share sacrifice, no? 3 by 20 and 2 by 20, right now? So that we have to minus 3 by 20 and 2 by 20. Tell me.
So 31 by 60.
Answer is 31 upon 60.
14 by
14 by 60. Check everyone now. And what is new partner share? So new partner share is 1/4, right? Rajani 1/4. Rajani is 1 by 4. So we have to equalize these denominators. So for equalization of denominator, we have to multiply here by 15 now. So answer is 15 upon 60, right?
Sir,
Yes, please.
sir, can you tell the difference between this term and before?
Yes, sir. In this term, new partner profit sharing ratio is given, right? See this one, right, Shivarish? New partner profit sharing ratio is given 1 by 4. And in the previous question, read this question. In this entire question, new partner profit sharing ratio was not given. So that's why this 2 by 5th and 1 by 5th proportion we apply on these 3:2. That is old share of old partner, right? But in this solution, in this question, 1/4 share is given of new partner, and that's why this 3:2 we applied on new partner profit sharing, right? Getting understood? Okay. So what will be the answer now? Final answer. So whenever it's ratio, we have to consider numerator, no? So therefore, new profit sharing ratio is equal to 31:14:15, right? Understood these? Yes, Shivarish, Dhanushri, Sadhna, any doubt, any questions so far? Right? Okay. Now we are moving further to the final one, that is share sacrifice and proportion of share sacrifice, both are not given, right? So we are covering what? So we covered first share sacrifice given. Secondly, we completed proportion of share sacrifice on old PSR is given. Thirdly, we completed proportion of share sacrifice on new partner share is given. And D part is, so neither share sacrifice is given, share sacrifice is not given. Similarly, plus proportion of share sacrifice is not given. So it's altogether different thing, right? Sir, I can say like this, so A, B and C, nothing is given, sir, right? Then how to calculate, right? So how to calculate? What is the formula? See the formula. Share sacrifice is equal to new partner share multiplied by old share. What is formula? Share sacrifice is equal to new partner share multiplied by old share. What we have to do? Sir, we have to consider new partner share, right? And for proportion, see, because proportion is not given, na. So what I'm assuming that new partner, whatever profit sharing ratio is getting by the new partner, is getting that from the old partner as per their old profit sharing ratio. So I can say it is as good as this only, as good as this C1 only, sir. Right, C1 only. Right. So in the C1, what we did? So in the C1, so we consider new partner profit sharing ratio multiplied by proportion. So here proportion is not given in the question, but we have to assume that old partner profit sharing ratio, old partner's old profit sharing ratio is as good as proportion of share sacrifice. Getting. So what is assumption over here? If I simplify D once again, I can say D and C is one and the same. Only in case of D that we are discussing, so proportion of share sacrifice, proportion of share sacrifice is equal to old PSR, old ratio we have to consider, old profit sharing ratio we have to consider. Getting? Dhanushi, Shivarish, Sadhna, what I'm saying, getting? If I compare this one with C part, what I'm saying, so it is exactly C, right? C case that we did. In C case also we consider new profit sharing ratio now. New partner share multiply what we did, multiplied by proportion, which is given in the question 3:2. Now proportion is not given. So whenever proportion separately is not given, I need to assume old share, old profit sharing ratio of old partner as a proportion we have to consider, and we can get share sacrifice. Getting? Shivarish, Dhanushri, Sadhna, series question, you will get more clarity now. See now. Anju and Rupesh are a partner sharing the profits in the ratio of 2:1. Right? Jagram is admitted for 1/4 share in the profits. So new partner profit sharing ratio is given 1/4. Right? Calculate new profit sharing ratio and sacrifice ratio. Right? So what we have to do, if this much of information is given, what we have to do? So we are going to do like this. So first thing, we have to calculate share sacrifice. Right? And share sacrifice will be new partner profit sharing ratio, new partner profit sharing ratio multiply by old PSR. We have to multiply it by old PSR, simple, right? So I can say 1/4. I am calculating for Anju, how much share sacrifice by Anju, and then I can calculate for Rupesh. So Anju's and Rupesh old share were 2:1, right? So 1/4 multiplied by 2/3, simple. And for Manju, for Rupesh,
1/4
multiplied by 1/3, right? So I will be getting share sacrifice 2/12 and 1/12, right? What will be sacrifice ratio then? Answer for sacrifice ratio, Sadhna, Dharishri?
2:1.
Yes, sacrifice ratio is equal to 2:1. Simple. Then we have to apply formula for new profit sharing ratio. What is formula? Old share minus share sacrifice. No, old share minus share sacrifice. Right? So tell me
Always
now.
this formula, sir.
Can you repeat?
Always this formula.
Always this formula. Yes, absolutely correct. For A, old share where 2/3 now.
2/3.
Minus share sacrifice is 2/12, right?
2/12.
2/12. For R, 1/3 minus 1/12, right? Right now?
Yes, sir.
Solve these.
18 by
You can
36.
You can solve by LCM.
Cross multiply.
6 by
Correct.
6/12. Simple. See, calculate, multiply it by 4.
So I didn't cancel it, sir.
Okay, no issues. Here 3/12. And what is new partner profit sharing? 1/4, no? So it is given new partner admitted into the partnership firm for 1/4 share. So J is for 1/4 share, right? So I'm writing for J as well. So J is for 1/4. So what will do? So we know that, sir, your denominator must be equal, no? For equalizing denominator, we have to multiply here by 3. So answer will be 3 upon 12, right? So final answer is 6 is to 3 is to 3, or you can simplify this, right? 2 is to 1 is to 1, right? Yes or no, Sadhna?
Yes, sir.
Dhanushree? Shivarish? Understood?
Yes, sir. Understood, sir.
Okay, good. So we covered these. Now I'm going to apply. I'm going to post next thing that we have to study here. So next thing or next concept that we have to study is regarding goodwill adjustment. Goodwill adjustment in admission of partner. See, we already did this in the previous chapter, treatment of goodwill, right? In that we started and we solved one or two questions. We are going to solve more question here now, and we are going to understand which journal entry we have to pass. There also we passed two journal entries, if you remember, right? I can give you overview, or I can revise what we did in the previous session or treatment of goodwill. In treatment of goodwill, we covered four sessions, right? We took a four sessions. In that third and fourth session, we covered this, right? Goodwill adjustment in case of admission of a partner. So there are two scenarios. Either a new partner will bring cash for goodwill into the partnership firm, or he will not bring, right? So if we bring, and then which entry we have to pass, that we understood, that we did. Bank account debit to old partner's profit sharing ratio, or you can say a sacrificing partner's capital account, right? Bank account debit to sacrificing partner's capital account in sacrifice ratio. And that's why we calculated sacrifice ratio, because for goodwill adjustment, the sacrifice ratio is mandatory and important. Second thing is, new partner is not bringing anything into the business. New partner is not bringing goodwill amount into the business. In that case, what we have to do? Sir, in that case, we have to debit new partner's capital account, and we have to credit sacrificing partner's capital account as per sacrifice ratio, right? So these two things we already did in the previous session when we completed treatment of goodwill. Same thing we have to do now with some more questions. Getting? So we are going to start goodwill adjustment and admission of a partner. You can take 5 minutes of break. Then I will be starting fresh concept, and this is a new concept, right? So what we covered, so we are covered so far how to calculate new profit sharing ratio and sacrifice ratio, right? Now the second concept, new concept that we are going to see here, that we are going to discuss here, is goodwill adjustment in case of admission of a partner. I am uploading study notes here, right? We'll start that in 5 minutes. You can take 5 minutes of break. Right, Dhanushri, Shivari, Sadhna? We'll resume. We'll begin in 5 minutes. Yes, Shivarish. Dhanushri, Sadhna, are you there? Shall we start? Treatment of goodwill in admission of a partner. Yes, Dhanushri, Shivarish, Sadhna. Am I audible?
Yes, sir. Yes, sir.
Okay. See, accounting treatment of goodwill on admission of a partner is discussed below. New partner brings cash towards goodwill. So what is happening here? So when new partner is coming into the business, he is bringing cash in terms of goodwill, right? Whatever name, fame and reputation of the business is today, so that is known as goodwill, right? And he is bringing what? He is bringing his share of goodwill in the cash, right? So if partner is bringing cash for goodwill, which entry we have to pass? So entry is cash or a bank account debit to old partners capital or current account. So which method we are following? If we are following fixed method, then we have to credit current account. If we are following fluctuating method, we have to credit old partners capital account, right? And we have to distribute the same in the ratio of sacrifice, right? This is general entry we have to pass. So we did this in the, yes please.
Sir, in which rule we are doing this? Please
Can you repeat?
In which rule we are doing this? Please repeat.
In which?
Rule.
Which rule? Tell me, I have explained this. What is the concept behind this? Dhanushri, Sadhna, please let me know. When we did the treatment of goodwill chapter, I have covered this, right? It's a revision for you. Tell me why we have to pass this entry only, cash bank account debit to old partner capital in current account. Tell me. You only asked me, Shivarish, in that case, at that time. So you understood why we debited cash in bank account. You understood that. You told me. But sir, why we created old partners capital in current account? You asked me this question, this particular question.
Yes, sir. Please recall that answer.
Yes. See, when new partner or anyone is bringing cash into the business, obviously cash is coming into the business. Cash will get increase or decrease? Increase. So cash is asset, and whenever cash or asset get increased, we have to debit it or not, right? Or you can apply. See, you might studied in your 11th standard golden rules of accounting as well as accounting equation, right? Right. You studied golden rules as well as accounting equation. What is accounting equation? Tell me, what is accounting equation? Remember accounting equation. Sadhna, Dhanushri, Shivarish.
Equalizing the value.
Capital is equal to
Capital.
asset is equal to
Asset
is equal to
liability plus
capital
capital.
plus liability. Right? You know the accounting equation now. Right? You also studied golden rules of accounting as well. So real account, personal account, nominal account rule. Real account rule says debit what comes in and credit what goes out, right? Remember that. Right? So here when cash comes into the business, so cash is my asset. So if asset is coming into the business, what we have to do? So we have to add it, we have to debit it. So yes, that's why we've debited. So but why we created so? Why we created? As I told you, why we created old partners capital account, the only thing is, sir, who is sacrificing here? Old partners are sacrificing, right? They are sacrificing towards a new partner. Whatever name, fame, reputation of the business is today, whatever standard of the business is today, whatever the level of the business is today is only because of the efforts put it by A and B partner. For example, A and B are the old partners, right? C partner is coming into the business now. So C is entering into ready-made business. He is going to enjoy benefits of this ready-made business in the future, right? And A and B give a space to partner C, right? They have given away space. They have given away their share toward partner C, right? So partner C is enjoying future benefit from the business, but A and B sacrifice. Sir, whenever A and B sacrifices and a new partner is going to enjoy benefit in the future, there has to be equalization, no? There has to be equal rights, no? Among the partners. There has to be equalization of partners. So what we have to do, so but obviously A and B sacrifice their share of a profit towards C. So now C needs to sacrifice for them. C needs to, whatever sacrifice done by A and B, for that, C needs to compensate. So that compensation is nothing but he needs to provide goodwill, right? So that goodwill amount which is brought in by new partner into the business, so that goodwill amount will be shared by A and B in their sacrifice ratio, because A and B sacrifice for C, right? And for that reason, whatever goodwill amount is brought in by the C partner, that is new partner, that will be shared by A and B between themselves as per their sacrifice ratio, as per how much they sacrifice, right? And that's why we have to credit old partners capital in current account. So capital liability is always a credit, right? Liability is credit. Whenever you want to increase liability, we have to credit it, right? And that's why we have credited old partners capital in current account. That is the one reason. And second reason is, sir, it is clearly mentioned in the accounting standard that we are not going to record goodwill in balance sheet, and that's why we are going to adjust this goodwill through the partners capital account. So there are a number of reasons. Just remember here, only one reason is there that you have to remember from your examination point of view. So whenever goodwill amount brought in by the new partner, we have to debit cash in bank account. But obviously the reason is cash comes into the business. Asset get increased, we have debited, right? So what is second reason? Why we created old partners capital account? Because sir, old partners is going to share that goodwill amount between themselves, right? And because they get goodwill amount, so but obviously their capital balance, current account balance will get increased, right? Entry. This is known as book entry. Actually, they are not getting any cash from the business, right? It's a book entry we did. We increase their capital and current account balance, right? Why we increase? So only reason is they have sacrificed towards new partner. They are going to sacrifice from their profit in the future towards C, that is new partner. So they should get something, right, for compensation of their sacrifices done, right? So that's why we have created old partners capital and current account as per the sacrifice ratio. Understood, Dhanushri, Sadhana, Shivarish? Getting? Yes, Shivarish?
Yes, sir.
Getting now?
Yes, sir.
Okay. So now I'm moving further. So goodwill brought in kind. What is kind? So kind means they have not bringing goodwill in cash, but in terms of other than cash, like asset he is bringing, right? So goodwill brought in kind. Kind means in the form of asset, right? So what new partner is saying, C partner is saying is, I supposed to pay into the partnership from a business 2,50,000 as a goodwill amount, but I don't have goodwill amount in the cash, or instead of giving cash for a goodwill, I'm bringing in, I will brought in, and he brought in what? One particular asset, for example, furniture, 2,50,000 rupees of furniture he brought in into the business for goodwill, right? So then what we have to which journal entry we have to pass? So for example, he brought in furniture, so furniture comes into the business, so asset will get increased. So if asset get increased, what we have to do? So we have to debit the asset, right? So whenever asset get increased, we have to debit it. So respective asset account debit, for example, furniture account debit. And what we have to do? So which I can say which account we have to credit? So we have to credit old partners capital and current account, again as per their sacrifice ratio, sir. So there is only one change. In the first journal entry, they are bringing in cash. So we have debited cash or bank account. And the second entry, so they have brought in what? They have brought in in the form of asset. So respective asset account debit to old partners capital and current account. Understood? Getting these? And why we created partners capital and current account? Again, the same reason, right? Shivarish?
Yes, sir.
Dhanushri? Sadhana? Understood these?
Understood.
Okay. I'm moving further. C case. So what is C case? Withdrawal of cash received for goodwill by old partners. So for example, A and B were the old partners, and C brought into the business, and C is coming into the business, and he contributed how much? He contributed 20,000 rupees as a goodwill amount. He contributed 20,000 rupees as a goodwill amount, right? And at 20,000 rupees, now old partners, they are withdrawing amount from the business. If they are withdrawing amount from the business, so we are going to pass the journal entry. Old partners capital and current account debit to cash or bank account, right? Simple. So in which proportion they are withdrawing, in that proportion we have to pass the journal entry, right? So cash bank account we have created because amount is going out of the business. And why we debited old partners capital and current account? Because sir, because of this their capital and current account balance will get decreased. Right? Getting understood this or not? So if withdrawal is there, then only we have to pass the general entry. Old partners capital and current account debit to cash or a bank account. So cash and bank account we have created because amount goes out of the business. So asset will come down, right? So if asset come down, we have to credit it. Simple. And why we debited old partners capital and current account? So because they have withdrawn, na? They have withdrawn amount. So henceforth, their capital balance, current account balance will get decreased. And whenever we want to decrease any liability, we have to debit it. Whenever you want to decrease any liability, you have to debit it, and whenever you want to decrease any asset, you have to credit it, and that's why we did this. Understood? You will get clarity with the help of by solving the question. So see this question, you will get clarity. Amol and Bhakti are partners who share the profits and losses in the ratio of 5:3. Chetan joins the firm on 1st of January 2022 for 3/8 share of the profits for her share of goodwill rupees 8,000. Right? Chetan joins into the partnership firm on 1st of January 2022 for 3/8 share of the future profit, right? And brings in cash for his share of goodwill 8,000 rupees. So he is bringing cash into the business, right? 8,000 rupees of cash is coming into the business and is brought in by the new partner for goodwill. Pass necessary journal entry for adjusting goodwill on the assumption that fluctuating capital method is followed and partners withdraw the entire amount of their share of goodwill, right? So what we have to do here, so first of all we have to understand which case it is. So case number 1 is this, right? Cash brought in for goodwill by new partner, right? So cash brought in for a goodwill by the new partner. So which entry we are going to pass, tell me. And first of all, tell me what is sacrifice ratio here. Is there a need to calculate sacrifice ratio, or you can directly tell me sacrifice ratio here? Sacrifice ratio is required, right? So what is sacrifice ratio here? Sadhna, Shivarish, Dhanushri. Tell me what is sacrifice ratio here? If you remember, sir, if this much of information is given, which one, sir? Old partners, old profit sharing ratio, and new partners, new profit sharing ratio. So there is no need to calculate sacrifice ratio. Sacrifice ratio is 5. So 3. Absolutely right. Even if you calculate now, you will get same answer. If you calculating, then you have to apply which case new PSR is not given. In that there are A, B, C, D case. Which case you are going to apply if you wish to calculate sacrifice ratio? Which case you are going to apply? A case, B case, C case, D case.
Sir, the profit sharing ratio given. Sir, proportion of.
No, proportion is not given, no? Sir, A case was share sacrifice given. No, sir, share sacrifice is not given. B was the case, share sacrifice is not given, but proportion on old share is given. So that is not also case. It is not given. C case is proportion on new partner profit sharing ratio is given. So that is also not given. So D case is share sacrifice is also not given, and share sacrifice is also not given, and proportion is also not given.
Yes.
Right. Then what we have to do?
New share into old share.
Yes, absolutely right. So new profit sharing ratio of new partner multiply by old share of the old partners. We can apply that. We can calculate share sacrifice, right? Even if you wish to calculate, you can calculate by case number D, right? But there is no need to calculate. You will be getting same answer, and that is 5:3. So my sacrifice ratio is 5:3. There is no doubt in that. Now tell me entry. So cash comes into business, Sadhna. So I will be debiting cash or bank account debit. How much amount comes into the business? 8,000 rupees. The second entry. So I will be, so which method they are following? Fluctuating method, na? So we have to credit capital account or current account. We have to maintain which account? Amol capital account, right?
Yes, sir.
And to Bhakti,
Bhakti capital.
absolutely right. So these 8,000 rupees I will be distributed in the ratio of sacrifice ratio, that is 5 to 3, right? Distribute this in the ratio of 5 to 3. It will come 5,000 and 3,000. Simple.
Yes, sir.
Okay. So we pass per journal entry. What will be the second entry now? Tell me. So they clearly mention here. They have mentioned here entire amount they have withdrawn, and partners withdraw the entire amount of their share of goodwill. They have withdrawn entire amount of their goodwill. So which entry we have to pass when they withdrawn? So when the withdrawn amount, we have to pass journal entry exactly reverse of this now, and that entry is Amol capital account debit, right? Bhakti's capital account debit.
Sir,
Yes.
sir, the partner who brings it as a withdrawal, sir.
No. The partner who is brought in that amount of goodwill is not going to withdraw now. Who is going to withdraw? Always old partner is going to withdraw, right? New partner will not withdraw because he see why he will withdraw. Tell me, why is bringing that amount of goodwill into the business? Because sacrifice done by old partners now. So who will withdraw amount? But obviously, sir, the person who sacrificed, that person will withdraw amount now. That person will enjoy the benefit now, right? Right, Shivarish? You brought in 10,000 rupees for goodwill into the business. Are you going to withdraw that amount now? No. Sadhna, Dhanushri is going to sacrifice, and that's why they are going to withdraw that amount, right? Because they are the old partners. So please remember, old partners are going to withdraw, not new partner, right? Okay, so Amul capital account debit, Bhakti's capital account debit to cash or bank account, right? So how much is the amount? So entire amount they have withdrawn. So I will be creating here 8,000 rupees, right? And so in which ratio we have to do this? But obviously, sir, their profit sharing ratio. So what is their profit sharing ratio? That is 5 to 3 only, right? 5 to 3 is the ratio only. So they are going to withdraw in sacrifice ratio only. Here it is wrongly written. There has to be a 5,000 and 3,000. 5,000 and 3,000. So this entry also we have to pass by sacrifice ratio only, I am saying, and the amount for this entry will be 5,000 and 3,000 only, right? 8,000 we are going to distribute in the ratio of 5 to 3 only, in the ratio of sacrifice only. Understood? Understood these? Dhanashri, Sadhna?
Understood, sir.
Yes, sir.
Yes, Dhanashri?
Understood, sir.
Understood. Okay, Sadhna? Shivarish?
Understood, sir.
Shivarish?
Understood, sir.
Okay. See next one. Read this question. First of all, read this question and let me know sacrifice ratio. Tell me answer for sacrifice ratio. Read this carefully and solve sacrifice ratio and let me know the answer for sacrifice. Then we'll be discussing about goodwill adjustment. Which entry we have to pass, we'll discuss that. But first of all, let me know answer for sacrifice ratio. That's done. Tell me sacrifice ratio.
Sir, 9 is to 1 is to 10, sir.
Yes, tell me once again.
9 is to 1 is to 10, sir.
1 is to 10.
9 is to 1 is to 10.
9 is to 1 is to 10. I am asking you sacrifice ratio.
Sorry, sir. 9 is to 1, sir.
9 is to 1. Okay. 9 by 11, 2 by 11 is the sacrifice. Means share sacrifice. Which formula we have to apply here? Vasudev and Deepa are partners sharing the profits and losses in the ratio of 3:2. They admitted Naina into the partnership for 1/4 share of the profit. Naina pays cash of rupees 3,000 towards her share of goodwill. The new ratio is 3:3:2. So new ratio is given to you, right? So what will be the sacrifice ratio? So sacrifice ratio is equal to
old new PSR,
no, right? Old share minus new PSR.
old share,
Old share minus new share. So Vasudev answer will be old share will be
3/5 minus
3/5 minus new share is
3/8.
3/8. Yes.
9/11. 9/40.
40 now. And for Deepa
2/5
minus
3/8.
8.
1/40.
Yes. So ratio is
9:1.
absolutely correct. Now tell me, which entry we have to pass? Naina pays cash of rupees 3,000 towards her share of goodwill, sir. So which entry we have to pass? Cash or bank account debit, right? How much? 3,000 rupees. And we have to credit? We have to credit Vasudev and Deepa, right? In the ratio of 9:1. Which capital account or current account we have to credit? Tell me, fixed capital method is followed. So it means we have to credit current account, yes. Vasudev's current account, right, Sadhna? Getting now? Same answer,
Yes,
current
sir.
account. So 3,000 in the ratio of 9:1. Tell me. 2,700 and 300.
Yes, 2,703.
Simple. Right, Sadhna? Okay.
Yes,
Yes. Now, so next thing. New partner does not bring goodwill in cash or in kind. Now we have to discuss this one. When new partner is not bringing amount into the business. Okay. So if new partner is not bringing goodwill amount into the business, what we have to do? So we have to adjust goodwill amount through the partner's capital account, right? And for that, we have to pass journal entry, new partner, capital or current account debit to sacrificing partners, or you can say old partners. Old partners, capital and current account, right? So how to remember the journal entry? First of all, I will tell that and then I will explain why we have to pass the journal entry, why we pass the journal entry. I have explained this in the previous class also, right? Okay. Sir, first of all, new partner is not bringing anything into the business, right? He is not bringing cash or asset into the business. So we are not going to debit cash or bank account or any asset account, right? Right? So there is no debit of cash, there is no debit of any bank account or asset account. So we have to credit old partners capital and current account in their sacrifice ratio, but obviously, sir, always we have to credit old partners capital and current account regarding goodwill adjustment in case of admission, because, sir, old partner and I can say old partner sacrifice towards new partner, right? So it's their right, to get compensation, right? And that's why we have to increase their capital and current account balance and we have to credit. Now, so here new partner is not bringing amount of goodwill into the business, then, sir, the rule is simple. If new partner is not bringing amount in terms of cash or in terms of any asset into the business, so we are going to reduce their capital, right? We are going to reduce their capital. We are going to adjust that amount to their capital, right? So capital is a liability. So liability always a credit. And whenever you want to decrease any liability, you have to debit it, right? So liability means what? So liability itself is a credit. Whenever you want to increase liability, you have to credit it. And whenever you want to decrease liability, you have to debit it. So here what I need to do, sir, here I will be going to reduce new partner's capital and current account balance, right? So new partner's capital, if I want to decrease, I need to debit it. because they are not bringing any amount into the business for goodwill. So I am having only one option, that I will be going to adjust through their capital balances. And second thing is, sir, I need to increase what? But obviously every time I need to increase the, sir, old partners or sacrificing partners capital and current account, and that's why we have created here. Understood the reason behind this? So entry will be new partners capital and current account debit to old partners capital and current account in their sacrifice ratio. Are you getting these? Dhanushri, Sadhana, Shivarish. Understood, Sadhana? Understood, Dhanushri? Shivarish?
Yes, sir.
Yes, sir.
Okay. So give me answer for this question. Read this question carefully. First of all, calculate sacrifice ratio, and then you can pass journal entry as well. Right? So first thing is to have to calculate sacrifice ratio, and then you have to pass journal entry. Do this. Let me know the answer. Yes, tell me sacrifice ratio. Yes, Dhanushri, Sadhana, Shivarish. Audible?
Yes, sir.
What is sacrifice ratio here? Yes, Sadhana, Dhanushri, Shivarish,
Sir, I
Ashish.
have considered as an 5:1.
Yes, Ashish and Munni were partners in a firm sharing the profits and losses in the ratio of 5:1. They have decided to admit Tanno into the firm for 2/9 share of the profit. The goodwill of the firm on the date of admission was valued at rupees 27,000. Tanno is not able to bring in cash for his share of a goodwill. Past necessary journal entries for a goodwill on the assumption that fluctuating capital system is followed. So absolutely correct. Sacrifice ratio is nothing but the old share, right? Right, everyone. 5:1. Now I am going to pass journal entry. So journal entry we know goodwill is not brought in by new partners. So we what we have to do? Which method they are following?
Tanu's capital
Fluctuating.
account.
Yes. Tanu's
Tanu's capital
capital account
debit
debit to
Ashish capital account.
capital account and
To Muni's capital.
Munni's capital account. Now, which amount we have to consider? See, when you are writing your amount, please read this line. The goodwill of the firm on the date of admission was valued at rupees 27,000. Sir, goodwill of firm is given. Goodwill of firm is given 27,000. Sir, I'm not interested in goodwill share of entire firm. I'm not interested in goodwill of firm. I'm interested in goodwill of new partner, right? So I need to calculate goodwill
Into
share, yes, share of new partner, and that is nothing but 27,000 rupees multiplied by his share. His share is 2 by 9. Answer is 6,000. So this 6,000 rupees I need to distribute now
calculating
in the ratio of 5:1. 5,000 and
1,000.
1,000. Understood these, Dhanushri, Shivari, Sadhna?
Yes, sir.
Yes, Dhanushri, are you there? Understood?
Yes, sir. Understood, sir.
Okay. Now what they are saying here, third case now. So we cleared when goodwill brought in. Second, we covered goodwill does not brought in by the partner. Now third case is goodwill brought in by the new partner but not entirely, partly brought in, right? So new partner brings only part of the goodwill in cash or in kind. Means, for example, he's supposed to bring 50,000 rupees of goodwill into the business, but out of 1,000 he is bringing only 25,000 or 30,000, right? And rest of the amount is not brought in by the that new partner into the business, right? So that is nothing but it's a combination of these two, right? So for the amount brought in by the new partner for goodwill, we are going to pass the journal entry, right? This case will be applicable. And for the rest of the amount, for which amount is not brought in by the partner, we have to apply this one, right? So C is combination of 1 and 2. Getting everyone what I'm saying? In first case, we understood goodwill amount brought in by the business. Second case, we understood, so when goodwill amount is not brought in by the new partner into the business, right? And C case, third case, we have to understand here part amount brought in by the partner and part amount he is unable to bring, right? So that is nothing but 1 and 2 combination. Getting, Sadhna, Shivari, Dhanushri? Okay. So which entry we are going to pass? So we are going to pass journal entry cash or bank account debit for which partner brought in, right? Then new partner's capital account we have to debit. For which amount, sir? For he does not bring. For the amount he does not bring, we have to debit new partner's capital account and we have to credit old partner's capital account. Yes, please. You can pass to yes, please.
For the portion he brings, we have debiting cash or bank account.
See. I'm repeating. Yes, absolutely right. Sir, we did first case now. First case when he brought in amount into the business, we pass journal entry cash or bank account debit to
then
old partners capital. This entry we pass. Then in the second case we pass journal entry
for not bringing.
Yes, not bringing new partner to old partner. Right. So what I'm doing, I'm combining these two now. So if you pass combined journal entry, what will be the journal entry? Cash bank account debit, new partner account debit to old partner's capital account and current account. Getting understood now?
Yes, sir.
Cash bank for amount brought in. New partner for amount does not brought in by the partner, right? Simple. And which ratio we have to apply? So sacrifice ratio only we have to apply, right?
Sir,
Yes.
but there may be a fixed amount for the goodwill, sir, for bringing.
See, the amount will be given to you. For example, he has to bring 1,20,000 or he has to bring 10,000. Out of that 10,000, he bring only 2,000 rupees. So which entry I will be passing? So
10,000 is fixed by whom, sir?
it is given in the question that he needs to bring 10,000 rupees into the business, right? So I will be debiting cash and bank account 2,000 rupees. For example, he brought in 2,000. How much is he unable to bring? 8,000. And we have to credit 10,000 rupees. Simple. Understood now, Shivarish?
Okay, sir. But 2,000 is bringing and 8,000 is not able
Not
to bring,
bringing.
sir.
Yes, yes, yes.
But 10,000, it's fixed, no, sir. That is fixed by whom, sir?
10,000 is the amount he is supposed to brought it into the business, right? Out of 10,000, he is able to bring only 2,000,
Yes,
right?
sir. But I am asking, uh, he can bring any amount as a
No,
goodwill,
no,
sir.
no.
But,
It's not like that. It's not like that. He cannot bring any amount. It's not like that. You have to always calculate value of goodwill. Now, if you remember, uh, we did a chapter called treatment of goodwill, right?
yes, sir.
So in that we calculated we did valuation of goodwill, yes or no? So
Yes.
valuation of goodwill is there. Based on that, for example, goodwill of entire firm today is 6 lakh rupees, right? And what is new partner profit sharing ratio? For example, new partner profit sharing ratio is 1/3. So out of 6 lakhs, how much he needs to bring into the business? Only 1/3. 1/3, right? So 6 lakh multiplied by 1/3, you will be getting answer 2 lakhs. So new partner needs to bring how much? 2 lakh,
2 lakhs.
right? So out of 2 lakh, how much is bringing? For example, is bringing only 1,20,000, right? So 1,20,000 I will be debiting. Yes, I will be debiting cash or bank account for 1,20,000. I will be debiting new partner's capital account debit for 80,000 and 2 lakh rupees. I will be distributing between sacrificing old partners in their sacrifice ratio. Entire 2 lakh rupees. Getting now?
Okay, sir.
Okay. Okay. See this question, you will get clarity. Ravindra and Dharmendra are partners sharing the profits and losses in the ratio of 3:2. They admitted Anuradha into the partnership. The new profit sharing ratio is 1:1:1. Okay, so we have to calculate sacrifice ratio here, right? Sacrifice share is equal to what? Which formula we have to apply? Old share minus new share, right? So we can get the answer for sacrifice done by Ravindra and Dharmendra, R and D. So their old share were 3:2, 3/5 and 2/5. Now their new share is 1:1:1. That is 1/3 and 1/3. Tell me sacrifice done by them.
4/15.
Yes.
4/15.
4/15.
Then 6. Oh, 1/15.
1/, or 3/?
1 by, sir.
Here 1/15. Okay. So what will be the sacrifice ratio? 4:1.
4:1.
Okay. So we have done with the sacrifice ratio. Now we have to read another further question. Anuradha's share of a goodwill is valued at rupees 2 lakh. Right? It is clearly mentioned. Anuradha's share of a goodwill is valued at rupees 2 lakhs. Means she's supposed to bring 2 lakh rupees into the business. She's supposed to bring 2 lakh rupees into the business, of which she pays only 1,20,000 in cash. So she's supposed to pay 2 lakh rupees into the business. Out of that, how much she bring? She able to bring only 1,20,000 rupees into the business. So 80,000 she is unable to bring, right? Pass necessary journal entries for goodwill on the assumption that fluctuating capital method is followed. Tell me which entry we have to pass. Tell me now. Yes, everyone. Sadhna.
Cash or bank account debit.
Yes. Cash or a bank account debit. For how much? 1,20,000.
1,20,000.
Then new partner's capital account.
Capital account.
New partner name is
80,000.
Anuradha, right?
Anuradha.
Anuradha's capital account
Debit
debit 80,000.
80,000.
And entire 2 lakh rupees we have to distribute in the ratio of 4:1
Yes.
between sacrificing partner, old partner, that is Ravindra and Dharmendra. To Ravindra's
Ravindra's capital account.
capital account and to Dharmendra's
Dharmendra
capital
capital
account, right?
2 lakh.
Yes, 2 lakh rupees in the ratio of 4:1.
1,60,40, sir.
6.
Next.
Yes, 1,60,000 and 40,000. Right, everyone, Dhanushri? So 1,60,000 I will be crediting to Ravindra and 40,000 I will be crediting to Dharmendra. And this is the final answer. See this answer. Cash, Anuradha, Ravindra and Dharmendra. Right? Share of goodwill of Anuradha credited to the old partner's capital account. Understood these? Dhanushri, are you there? Yes, Sadhna?
Understood.
Sadhna is not well today, I guess. What happened, Sadhna?
Headache.
Okay, you have to happy. Mumbai Indians qualified.
Yes, sir.
Headache is there. Okay. Dhanushri, are you there?
Yes, sir.
Understood these or not?
Yes, sir. Understood, sir.
Okay. Now we have to move further into the next thing, that is already existing goodwill. So what does it mean? Already existing goodwill means. See, read this question, we'll get the idea. Sai Suman are partners in the firm, sharing the profits and losses in the ratio of 4:3. On 1st April 2022, they admitted Sai as a partner. On the date of Sai's admission, goodwill appeared in the books of the firm at rupees 3,50,000. By assuming fluctuating capital account, pass necessary journal entry if the partner decided to write off the entire amount of existing goodwill and write off 2,10,000 of the existing goodwill. So what does it mean? See, on the occasion of admission of a new partner, they are saying they are saying in their balance sheet goodwill is already there. Goodwill amount is already there in their balance sheet asset side, and that is 3,50,000 rupees. Right? So 3,50,000 was already there at the time of admission of a partner. 3,50,000 rupees of goodwill was already there on the balance sheet asset side. Sir, in such a scenario, what we have to do? Right? In such a scenario, they decided two things. Basically, two sub questions are given. First question is write off entire amount of existing goodwill. So what is meaning of write off? So write off meaning is cancelling. Right? Write off means we have to cancel down. We have to cancel down entire amount of goodwill, that is 3,50,000. And in the second case, they are saying write off only 2,10,000 of the existing goodwill. They are going to write off. They are going to cancel only 2,10,000. So what is left now? How much left? So if they are writing out of 3,50,000, out of 3,50,000 rupees, if they are writing off, if they are cancelling 2,10,000 rupees, then balance is 1,40,000 rupees, right? So 1,40,000 rupees is the balance. They are not going to write off. It's still balance over there, right? So two cases are available here, or two sub questions are available here, and accordingly I need to pass the journal entry. See, which entry we have to pass when goodwill is already appeared for writing of goodwill, for cancellation of goodwill? Please tell me one answer. I'm asking you, Sadhna, Dhanushri, and Shivarish. Goodwill is nothing but asset for us, that we know, right? Sir, if goodwill is asset, asset means debit or credit, Sadhna, Dhanushri, Shivarish? Goodwill is asset. Asset means debit or credit?
The debit, sir.
Asset means debit. And if you are cancelling this asset today, what we have to do? We have to debit it or we have to credit it?
Credit it.
Simple, sir. If you want to cancel, if you want to decrease any asset value, you have to credit, right, Shivarish? Right, Shivarish?
Yes, sir.
Sadhna?
Yes, sir.
Sir, asset means debit. If you want to decrease any asset value, if you want to cancel any asset, you have to credit it. Simple.
Sir.
So that's why entry is goodwill account credited. See, goodwill account we have to credit. Now, which account we have to debit, sir? Sir, if goodwill amount is getting cancelled, then but obviously it's a loss for partner, yes or no? Yes or no? if goodwill amount is cancelled by the firm, but obviously it's a loss on the part of the partner, their capital balances also will get reduced, right? So when we want to decrease any liability, so liability means credit, and whenever you want to decrease any liability, you have to debit it, right? So hence we have to debit old partners capital and current account in their which ratio, sir? In their old ratio, star mark. Very, very much important. So don't get confused, sir, which ratio we have to apply. And they apply which ratio? They apply sacrifice ratio. No, sir. We are not going to apply sacrifice ratio here. Only reason is, sir, this goodwill that we are writing off, it's already existing goodwill, which is already there in my balance sheet, right? It's before, this event is before admission of a partner, right? So a partner is not yet admitted so far, right? Before admission of a partner, we are writing off, we are cancelling our goodwill that is appearing in the balance sheet, right? So any event happening before, any goodwill event or any goodwill adjustment that I'm doing before admission of a partner that is not related to that new partner, so we have to apply old ratio only, right? So because of goodwill write-off, so but obviously goodwill amount will get cancelled. Goodwill amount we have to cancel, we have to reduce goodwill amount. So whenever we want to decrease any asset, we have to credit it. That's why we have created a goodwill account. Now, what is the reason for debiting old partners capital and current account? So reason is simple. So because of the goodwill, sir, partners capital and current account balance will get reduced, because whenever they get retired, whenever any partner, suppose a partner is retiring from the partnership from business, he is not going to get any goodwill amount, because the goodwill we have written off, right? So that's why whenever goodwill get write off, so we have to decrease that much of amount from the capital balances of the partners, right? So we have to decrease that. That's why we have to debit old partners capital and current account as per their old ratio, right? That is the entry. Now I'm coming into this question now. So first is writing of the entire amount of existing goodwill. So if I'm writing of entire amount of existing goodwill, which entry I will be passing? So I will be debiting old partners capital account, right? And which method they are following? Fluctuating method. So I need to debit capital account only, right? So size capital account debit, Suman capital account debit to goodwill account. This entry I will be going to pass. For entire goodwill amount, that is 3,50,000. 3,50,000 I will be writing here, and this 3,50,000 I will be distributing in their old ratio, that is 4:3, right? 4/7 and 3/7. So I will be getting answer 2 lakh rupees and 1,50,000 rupees. Understood these, Shivari, Sadhna, and Dhanushri, right? Write off the entire amount of goodwill. Understood? Okay. Now, so second thing is write off 2,10,000 of the existing goodwill. Only 2/10 we are writing off. To write off 2,10,000 of the existing goodwill. So what we have to do? Then only we have to consider 2/10, right? Entry will remain same. Only we have to consider that much of amount that they are going to write off, right? Size capital account debit, then Suman's capital account debit to goodwill account. So goodwill amount is 2,10,000, and this 2,10,000 I will be distributing in between Sai and Suman as per their older profit sharing ratio, that is 4:3. Getting? Amount will be 1,20,000 and 90,000 rupees. Understood this or not? And one more concept here is that we skipped, but I'm explaining this now. So what is written over here? When goodwill is paid by the new partner to the old partner privately, no entry is made in the books of the partnership firm. So what does it mean? Can anyone tell me? When goodwill is paid by new partner to the old partner privately, so what does it mean? Privately means?
Sir, the goodwill amount has been directly paid to the partners.
Yes, means they are not bringing any amount into the business, right? Personally, they are doing transaction. Getting? Sadhna, Dhanushri, Shivarish. Personally, they are doing this transaction of goodwill. They are not doing adjustment through the business, right? They are not brought in any amount into the business, right? In such a scenario, I'm not going to pass any journal entry. The simple reason is, sir, I'm preparing this account not for any person, not for individual person. I'm doing this for partnership from business. So if any transaction is not related to partnership from business, I'm not going to record it, right? It's a personal transaction, so I'm not bound to record this transaction. Understood? Okay. Now, see the question. Arpit and Priyanka are partners who share the profits and losses in the ratio of 3:2. Bolaram joins the firm for 1/5 share of the profits and brings in cash for her share of goodwill 1 lakh rupees. What they are saying? So Arpit and Priyanka, A and P were the old partners who share the profits and losses in the ratio of 3:2. They share the profits and losses in the ratio of 3:2. Bolaram joins the firm for 1/5 share. So Bolaram is the partner who joins the firm for 1/5 share in the profit. 1/5 share in the profit. And brings in cash for her share of goodwill 1 lakh rupees, and is bringing 1 lakh rupees into the business as a goodwill. Pass necessary journal entries for adjusting goodwill on the assumption that fluctuating capital method is followed and partners withdraw the entire amount of their share of goodwill, right? And they withdraw an entire amount of goodwill as well, right? So it means we have to pass first journal entry for goodwill brought in by the partner, right? And secondly, withdrawal of the amount of goodwill, right? So first of all, he brought in and then withdrawal. Tell me which entry we have to pass. Everyone tell me. Orally tell me which entry we have to pass for first one brought in by the partner. Yes, Sadhna, Shivari, Dhanushri. Tell me. Goodwill amount brought in by the partner. Which entry we have to pass for that? Cash or bank account debit, right? To Arpit's capital account and to Priyanka's capital account, right? And in which ratio we have to do this? So we have to do this by sacrifice ratio. So there is no need to calculate sacrifice ratio. The 3:2 will be the sacrifice, right? So 1 lakh rupees we have to distribute in the ratio of 3:2. Yes or no? See, cash account debit to 1 lakh, to Arpit capital account, to Priyanka's capital account in the ratio of 3:2. So it means 1 lakh multiplied by 3 divided by 5 and 1 lakh multiplied by 2 divided by 5, right? Understood? And then what they are saying, entire amount is withdrawn. If entire amount is withdrawn, then which entry will pass? Exactly reverse entry, sir. Arpit's capital account, Priyanka's capital account to cash account. See, amount withdraws, being cash withdrawn. Arpit capital, Priyanka capital account we have debited and cash bank account we have credited 1 lakh rupees, and it's in the ratio of their sacrifice only 1640. Understood these? Exactly reverse entry we have to pass, right? Understood, Shivari, Dhanushri, Sadhana? I guess you are getting bored, Dhanushri, Sadhana, Shivari.
Understood,
I guess you are getting bored. Yes, Shivarish?
Little bit.
No, no.
Little bit bored. Sadhana saying no. Dhanushri?
no, sir.
Okay. Why, Shivarish, you are getting bored? Lots of homework there in the school. There is no school, I guess, now. Today is Sunday.
Same routine from Monday to Saturday.
Same, because of same routine. Schools, there is holiday. There are holidays now.
But I used to go to practice.
Okay, Kho practice.
Athletics.
Athletics, okay.
One day Kho, one day athletics.
Okay. Good. So no issues. We are going to wind up this now. We are going to do only one last concept regarding goodwill, that is hidden goodwill, right? 2 questions are left, then we will wrap up. Okay, series. When value of goodwill of the firm is not specifically given, what they are saying, when the value of goodwill of the firm is not specifically given, the value of goodwill has to be inferred as follows. Means we have to find out. So how to find out value of goodwill in such a scenario, and that is known as hidden goodwill. See the formula. So this is the formula that we have to remember. Incoming partner's capital, incoming means new partner's capital multiply by reciprocal of share of incoming partner. So what does it mean? Reciprocal means, for example, if a new partner is coming into the business and we are giving him 1/4 share in the future profit, right? And he is bringing how much capital? So he is bringing 5 lakh rupees into the business as capital, right? So what we have to do for calculation of goodwill, so we have to consider his capital 5 lakh rupees, and we have to multiply this 5 lakh rupees by reciprocal of his share. So reciprocal means we have to do 4 by 1, right? 5 lakhs multiplied by 4 by 1. So I will be getting answer 20 lakh rupees, right? Okay, this is the step number 1. Then we have to subtract total capital after taking into the consideration the capital brought in by the incoming partner. And so what we have to do, then in this, out of this 20 lakhs, we have to subtract total actual capital of the firm. Total actual capital of the firm. So that is nothing but, if there are 3 partners, A, B and C, so we have to add everyone's capital. A plus B plus C's capital, right? And whatever difference you are getting, so that is goodwill amount. For example, the 20 lakh rupees is the amount we get in the first instance, in the first step. In the second step, I'm getting amount of entire goodwill is somewhere around, okay, I can say I'm getting answer somewhere around 18 lakh, right? So the difference between these two is nothing but goodwill amount. Getting? So this difference between these two is goodwill amount. So what I need to do, first of all, I need to consider base as a capital of the new partner multiply by reciprocal of his share. Reciprocal means if his share is 1 by 4, I need to do 4 by 1. So I will be getting 20 lakhs. Then I need to subtract what? Total actual capital of the firm. That is total of capital of the A partner, B partner and C partner if there are 3 partners. It comes 18 lakhs. So 20 lakhs minus 18 lakhs. So balance is 2 lakhs. So 2 lakh is my goodwill amount. Getting? By this I can calculate goodwill. See the question, you will get clarity. A, B are partners with the capital of 7,000 each. They admit C as a partner. They admit C as a partner with 1/4 share in the profit of the firm. C brings 8,000 as his share of capital. Give necessary journal entry to record goodwill. First of all, we have to calculate goodwill, right? How to calculate goodwill of the firm? Right? Goodwill amount is not given. How to calculate goodwill amount? So I will be calculating goodwill amount like this. So C's capital is how much? So C's capital is 8,000. Multiply by reciprocal of his share. So C's share is how much? 1/4. So I will be doing 4 by 1. So answer is 32,000 rupees, right? So this is first. Secondly, I need to calculate total capital of the firm. So total capital of the firm is A, B, 7,000 each. So I will be adding 7,000 plus 7,000 plus, right? Plus C. C brought in how much? C brought in 8,000. So I will be adding 8,000 of C. A, B and C. So what is total? 22,000. Right now? 22,000 is the total. So what is balance now? So balance is 10,000 rupees. So 10,000 rupees is goodwill of firm. But sir, I'm not interested in goodwill of firm. I'm interested in what? Tell me everyone. Yes, I'm interested in goodwill share of C. So goodwill share of C is equal to 10,000 multiplied by 1/4 share. So answer is 2,500. So goodwill share of C. So once you know answer 2,500, now you can pass the journal entry. So which entry we have to pass? So C brought in goodwill into the business now. Yes or no? Is he brought in goodwill into business? No sir, no. I'm asking you, Shivari, Dhanushri, Sadhna, whether new partner brought in goodwill amount into business or not. The answer is no. So if he is not bringing any amount of goodwill into the business, then what we have to do? So we have to pass journal entry. Yes. Yes. New partner's capital account to old partner's capital account in their sacrifice ratio. So 2,500 here, and we have to do this. We have to distribute between A and B in their sacrifice ratio. So what will be the sacrifice ratio? If nothing is mentioned, sir, they see their old profit sharing ratio is also not given in the question, right? So I will be considering their old PSR. I know, sir, old PSR is equal to sacrifice ratio, but old PSR is also not given. So what we have to do? So we have to consider
Equally.
equal 1:1, right? So I have to distribute in the ratio of 1:1. 10,000. Understood? Dhanushri, Shivari, Sadhana, understood this or not?
Understood, sir.
Okay. So the final question, series question. A and B are a partnership sharing the profits and losses equally. The balance sheet of Mrs. A and B as on 31st of December 2016 was as follows. Right? Balance sheet is given to me. Okay. On 1st of January 2017, they agreed to take C as a one-third partner to increase the capital base to rupees 1,35,000. C agrees to pay 60,000. Show the necessary general entries and prepare capital account. Okay. So C agrees to brought in how much capital? 60,000. So first of all, I need to calculate uh, base capital, or I can say 60,000 rupees of capital brought in by him multiply by reciprocal of his share, that is 3/1. So right. After that, secondly, what I need to do? Secondly, I need to do capital, total of capital, actual capital, that is A's capital plus B's capital plus C's capital, sir. And that is nothing but 45,000 plus 45,000 plus 60,000. What is total? 45 plus 45, 90. 90 plus 60, 150, right? So what is difference?
30.
So 30,000 is goodwill of the firm.
So,
So from where I get 45, 45? No, not everyone. You see, it is given, right? Okay. Now what we have to do?
you have to find out.
We have to find out goodwill of C. So C share of goodwill is how much?
30,000 into 1/3.
10,000.
10,000.
30,000 multiplied by 1 divided by 3. So answer is 10,000. Has he brought in goodwill into the business?
No.
No. Then which entry we have to pass?
C's capital account debit
Yes.
to A's capital
To B's capital in their sacrifice ratio, that is 1:1, right?
5,000. 15,000. Okay.
See, so they have passed the entries here. Pass is necessary. They ask you to pass necessary journal entries now. So that way, first entry they pass for capital brought in by the partner. Bank account debit to his capital, 60/60, right? Now we have to do this entry for raising of the goodwill. So 15,000 or 30,000. Check once again, please. Please check once again goodwill answer.
Sir, why we are adding 60,000, sir?
New partner share of goodwill now. In the previous question, what I did, look into this question. How I solve this. Check this. Right now,
Yes, sir.
no. So see where we did mistake. Is our answer wrong or is our answer correct? Let me know. Read it carefully once again. Yes. We did mistake in one thing at one point. Can anyone tell me where is the mistake? Whatever we solved, 30,000 rupees of goodwill that we have calculated is not wrong, sir. It's not correct, sir. That is wrong. Where we did mistake? Can anyone tell me? Sadhna, Dhanashri, Shivarish.
Thinking.
See, one line is given. On 1st of January 2017, they agreed to take C as a 1/3 capital base rupees 1,35,000, right? Right. So capital of entire firm is already given to me 1,35,000, right? But what I did, I consider this 45, 45, and 60. I consider this, I get 1,50,000 answer, right? And here is the mistake. So total of A plus B plus C is already given to be 1,35,000. They are planning to maintain 1,35,000 only, and which is given in the question. In the previous question, that was not given. That's why I have considered addition of A plus B plus C, right? But here, after considering 60,000, they're going to maintain capital at rupees 1,35,000, right? So there has to be a capital, or actual capital has to be a 1,35,000. Why? Because it is actually given. It is given in the question that after brought in 60,000 by C for a capital, sir, the total base capital of a partner, entire partnership firm business will be 1,35,000. But how it will become 1,35,000, so that we don't know. If you see, if I calculate 45, 45 plus 60, I am getting 1,50,000, right? So that 1,50,000 is correct answer when they have not given me this line that they are wish to consider total capital of the firm only 1,35,000, right? If they wish to consider total capital of the firm only 1,35,000, it means over and above capital more than 1,35,000, they might be going to return. Might be going to return it to the old partner, right? So what that I don't know, but I know, sir, how much capital they are going to maintain. So they are going to maintain 1,35,000. So instead of 150, I need to consider 1,35,000. Getting Sadhna, getting Dhanushri, getting Shivarish. So if we subtract this now, you will be getting answer here 45,000 rupees, right? And here we have to apply 45,000 multiplied by 1 by 3. I will be getting answer 15,000, right? And then my answer is correct. Getting? So answer will be C's capital account debit to A's and B's capital 15,000, 7,500, 7,500. So they have passed this entry for withdrawal also, but it is not mentioned in the question, right? If it is not mentioned in the question, there is no need to pass the journal entry, but they have passed journal entry for withdrawal also. And withdrawal entry is nothing but, yes.
But sir, there is necessary entries. So.
Yes, they have mentioned necessary journal entries. See, basically they have applied here accounting standard. Accounting standard says you are not going to write down goodwill amount in the balance sheet, right? That's why they have created. But I can say you, there has to be a line for this. Without any adjustment, I cannot do this, right? So I'm advising, don't pass the journal entry unless until they are not giving you in the question that you are going to withdraw amount or partners withdrawn the amount. You are not going to pass the journal entry, right? So I'm telling you, no, don't pass that third journal entry, that is withdrawal of goodwill amount, because it is not mentioned in the question. Getting understood these? How we get 15,000?
Sir, if they mention, we have to.
Yes, if they mention then we would be passing that entry, third entry.
If they mention like partners as
Withdrawn. Yes, yes, absolutely right. They have not mentioned, there's no need to pass journal entry, right? Understood? Okay, so we have completed goodwill adjustment concept as well, right? So what we completed so far, tell me. In admission of a partner, we completed first thing, calculation of sacrifice ratio and new profit sharing ratio, right? We have completed this, and now we completed goodwill adjustment, right? And from third session onwards, we are going to start new concept regarding how to prepare revaluation account, right? how to prepare for capital account of the partner, right? And how to pass necessary journal entries at a time of goodwill, how to prepare balance sheet after the admission of a partner, right? Those concepts will be from next upcoming sessions, right? Understood? So do revise this. These two concepts will be helpful in the upcoming sessions, right? We have to use that. Getting Shivarish, Dhanashri, Sadhna, do revise that.